What the was that?
Hey, good afternoon, and welcome to the Underbelly podcast, brought to you by Clarity Financial. Let's see, we're going to get the right cameras here.
There you go.
Because Jesse looks a little uncomfortable. Just being the only guy on camera.
Oh, the only.
Good afternoon, everyone. Happy Friday. Go ahead, Brent. Give us a big spiel.
This is the Underbelly podcast. It's the stories behind the stories, the news behind the news, and we've got an interesting 3/4 of an hour for you. If we last that long, who knows? But we got Mike O'Neill, Jesse Colombo, John Coumarianos, and the lovely and talented Kanwal Iqbar is going to make her debut appearance on the Underbelly podcast this afternoon.
I'm really excited for what Kanwal has to talk about.
She's got an interesting story to share.
Because right here in Houston, we are one of the few cities that are blessed enough to have a Carvana car vending machine.
That doesn't suck.
It doesn't suck. Not every town has one of these things, and it's a big tower less than a mile from our studio here.
Look like a giant
Right
vending
off
machine.
I-10.
Yeah,
I
right
saw
off
that
I-10.
recently.
Yeah.
I was
Yeah,
wondering what that
and
was.
you go, you buy the car. It's like they'll deliver the car. I'm spoiling it, but they deliver the car. But you show up, they give you a Bitcoin, you put it in, and it will deliver a car like a vending machine.
They give you a Bitcoin?
A Bitcoin?
Not
Really?
a Bitcoin, a big coin. Big coin.
Okay. I heard the same thing. I was like, whoa.
That's different.
No, but you put in the big coin, you deliver it, and I'm told if you just kind of really give it a good shoulder hit to the building, you get a second car for free. Yeah, but you're not going to like the condition that it comes in. So welcome everyone to the big post. As we speak, I'm a little distracted because I'm sharing it on Facebook. So if you're watching on Facebook, I want you to come in and take a look. We already have Neiman Eaton. Hi, Neiman. How you doing?
Neiman.
Thank you so very much. Do you know Neiman?
Is his middle name Marcus?
I don't know. Not
Okay.
Neiman Marcus Eaton. Neiman Marcus Eaton. If you've got something to say, we'll welcome any comments that you
We'd
have.
love to hear from you. Exactly. But let's I guess start off with the markets for this week. We've kind of had an interesting week, and who wants to go first?
Well, it has been an interesting week. Right now, the markets are up for the day. The Dow is up about 33 points. The Nasdaq is up almost 16. The S&P is up 8. For the week overall, though, the S&P is down just by about 6 points. So it's really kind of been a flat week. Not a lot interesting happening out there. John, have you been paying close attention? Everyone around here has been like studying and writing their columns.
Yeah.
And the day-to-day markets, sometimes we lose track of. But John, have you been paying much of attention?
Yeah, I'll say a couple of things and then maybe hand it over to Jesse. I think the S&P, for all the ups and downs for the year, is basically flat for the year, maybe up or down one percentage
up.
point.
It's up, but not by much.
Yeah.
Let me see here as I'm. I apologize. No, actually, when I look back to January 2nd or January 3rd or 2nd, when the year started, as I tweaked this just a little bit, we were right at about 2673.
Yeah.
Yeah, so we're 2695. So we are down only 22 points for the year on the S&P. So it's not much of a...
And if
about
you
0.1%.
add dividends, that helps. So
And if you follow that day to day, you'll just drive yourself nuts.
you'll just be insane, of course. So bonds are down. I think that's the big story. The main bond index is it's a mouthful. It's the Bloomberg Barclays U.S. Aggregate Index, and that's down a little over 2% for the year, I think.
It's an interesting acronym.
Yeah.
Now the markets on Wednesday, we saw a lot of movement on the markets on Wednesday, and I think that was when the bonds hit just over 3%.
So this is one of the big stories of the year, of course, whether the 10-year Treasury is going to hit 3%. It did hit 3% for a short while, but it seems to not be able to stay there for very long. It comes down to 2.9 and change where it is now. And so this is the big story. Are rates really going to go up and stay up? No one really knows yet. Everyone has opinions, but...
And here at Real Investment Advice, we've been keeping a very close eye on that 200-day moving average. We dipped below it, I think, for one day on the S&P, or at least the index, and it's kind of stayed above it, but it still seems to be having trouble getting above it. The 50-day crossed below the 100, and so we're hoping for it to see it rally. I mean, nobody roots for people to lose money, but of course, we're always talking about how everything is overbought, how we're way above where we really should be, even when you look at the trend that started when this bull market started way back in 2009.
Yeah.
So,
and of course there are relationships between the stock and the bond market, right? Higher interest rates provide competition for investment dollars and can take money away from the stock market if bonds look more attractive. Also, when you try to price or value the present value of an asset, you use a discount rate, and when bonds are giving very low yields, that discount rate's very low, and it tends to elevate the present value of assets.
Right.
So there's certainly a relationship between the two, and the volatility of the stock market probably has something to do with what's going on in the bond market. Yeah. Last thing I'll say is REITs are rallying today in a kind of big way, but they've been down probably in sympathy with bonds for the year. REITs are, of course, real estate investment trusts. They pay 90% of their earnings as dividends, and so they tend to trade a little bit like bonds, and they're kind of sensitive to when bond yields jump around.
Yeah.
So that's the other big thing.
And another thing that you educated me about that I'm still trying to grasp is this whole idea of the yield curve and the differences right now. Just in the past week or so, we've actually seen a little bit of movement on that 10-year versus the 2-year, the gap between the two. Yeah. At last check, actually, when things closed, we're actually about 0.5%. The 10-year, 10-year minus 2-year. Very close at about 0.5% right now.
Yeah. So, I mean, generally, I think investors understand that when they lend their money for a longer period of time, let's say 10 years instead of 2 years, they should get paid. You should get paid more money. We go through weird moments, though, in the markets where that spread or the difference in yield is either flat or negative. You actually get paid less to lend longer.
Right.
Very strange moment when that happens, but it does happen, and it tends to predict recessions. I'm sure Jesse will have a lot to say about that. But we're very close to being flat now, I guess, is the point.
So yeah, if people are less interested in having their money, it's like the short term, you would think that it's like, okay, I'm going to give you my money for a short term, and the government wants the money for the short term, so then they'll pay you more. But it's like as interest in the short term disappears, that yield goes up because sales go down, yield goes up. Right?
Yes.
Am I getting that right?
Yeah, you're getting that right.
And then it's like more people are saying, no, I want to lock in my money for longer because I don't know what this market's going to do.
Yeah.
So they lock it in for longer, and then as that drives up the sales, then the yield goes down, and that's what we're talking about when we talk about that gap.
Yeah. So you would accept a lower yield to lend for 10 years only if you thought yields were going to go lower still. And that would mean you're anticipating kind of bad economic times.
I tried to make an analysis about like how long you want to go into the bomb shelter. Like, it's like, do you think that the bombs are going to fall within the 2 years or 10 years? I'm going to hang out in the bomb shelter until the end. You didn't like the analogy. I don't know. I think it's a good analogy. We'll try for it later.
All right.
But Jesse Colombo, welcome. Thank you very much for being here. I know you're just like, I don't know. We're always dragging you for the Underbelly podcast. You and I were talking about the strength of the dollar. What's going on with the dollar out there?
Well, that actually relates to what John was saying, how you have the rising interest rates in the United States. Well, what's happening is it's encouraging more money to come in from overseas or basically bringing back capital back into the United States. It's flowing back into the U.S. dollar because there's higher interest rates, so they're trying to look for a return, basically. So it relates to an article that I wrote earlier this week called "The Smart Money is Bullish on the Dollar." And what's interesting is that when I wrote that, the dollar was mostly in a consolidation pattern known as the triangle. If you go to realinvestmentadvice.com, you can see that report. I believe it was on Monday that I published it, Monday afternoon. And you can see for the last 2 or 3 months, the U.S. dollar index was consolidating, and it's basically been squeezing to a fine point, so it forms what's known as a triangle. And usually when they break out, either to the upside or to the downside, there tends to be a powerful move. So what I was showing in this piece was that the smart money or the commercial futures hedgers who tend to be right at major market turning points were extremely bullish on the U.S. dollar. So for me, that increased the probability that there was going to be an upside technical breakout, which ended up happening over the last few days. And since I wrote that report, not that I was making any wild predictions or anything, but I was saying there's a higher probability of there being some sort of a bullish move in the dollar. Since then, the dollar's been going up, and I believe it may have even more legs, basically, as this trend continues. Also, for the other reasons why what I'm basically about to discuss here is the fact that, well, if you look at the U.S. dollar index on the 5-year time scale, basically the weekly time scale, you can see every time the smart money became bullish, or as bullish as they are right now, there was a major dollar rally. So the last time we saw that was basically early 2016, early 2014, when there was a huge dollar surge, and that dollar surge basically put the kibosh on the oil bull market, because when the dollar goes up, it hurts oil and other commodities.
Right.
So
because they're priced in dollars.
Right, because they're priced in dollars. So what's interesting is that the smart money are as bullish on the U.S. dollar now as they were back in 2014. So there could be a pretty dramatic dollar surge, which is something I'm concerned about. Same thing in 2013. U.S. dollar had a bit of a rally after commercial hedgers or the smart money became as bullish as they are now. So, and then what's interesting too is that you're seeing the same pattern basically, but the inverse in these other currencies, these non-U.S. currencies, like the euro. You're seeing the same thing in the British pound. You're seeing the same thing in the Japanese yen. They all trade inversely with the U.S. dollar. So when the euro and the pound, the other currencies go down, the dollar goes up. So you can see the smart money are actually extremely bearish on the euro. And again, it's hard for me to convey a chart right now, but if you go on the website, you can see that. Basically, you can see that before the euro plunged in 2014, the commercial hedgers of the smart money were bearish to a certain degree. Well, they're actually much more bearish now. They have 200,000 net futures contracts short on the euro. So they're expecting a decline in the euro, which would boost the dollar.
Yeah. Now to talk on the macro scale, because I'm looking here. It's like since February, that was kind of when the Bloomberg Dollar Index kind of hit a low, and and it has been kind of steadily climbing, and it looks like it's on a steady climb right now. Now, when we were talking about the increase in the dollar,
right,
we talked about how it's like when the dollar goes up, that means our exports, what countries pay for our stuff, gets more expensive for them.
Exactly.
So that can decrease our exports.
Correct.
But
hurts our deficit,
but then our imports can increase. So then consequently, that means our trade deficit gets bigger.
Exactly. And then the inverse is also true.
Yeah.
So not that there's been that much of a movement in the dollar to really make a big difference at this point, but obviously if this trend has legs, then we become more concerned about the effect on the trade deficit. But my number one concern is the effect on commodities, particularly oil, because as I was saying, speculators or the dumb money, they become the dumb money when they reach a very large position in one direction or the other. These speculators or hedge funds have been extremely bullish on oil. And if you see that, it's really the last chart that I have in that blog post, you can see that it's basically unanimously Wall Street and the hedge funds expect oil to continue going up, whereas the smart money, where the hedgers are betting on the exact opposite. So my concern is that if the dollar continues going up even more, it could really basically put the end to this rally in crude oil and cause a major liquidation sell-off.
Mm-hmm. Jesse, you know so much about currencies. What is go through again the effect of interest rate? A currency becomes more valuable when rates go up. So that's hence the dollar's becoming attractive. Does that mean? Do you think rates are going to stay where they are? Is it easy to say that, or difficult?
Well, in terms of rates, right now a lot of it's just technical trading at this point, because really we're looking at 3% is a major resistance in the 10-year, and it looks like it bumped its head on that, and it's heading back down.
Right.
So Michael Leibowitz, one of our analysts, wrote a really good article about that about a month ago. We're really at the last Fed meeting, and he was saying that there's no way of really predicting and saying in advance, this is going to go here. We can only really take a reactive approach and see if it breaks those key levels in a decisive manner, or if it tries to do it and it can't do it and falls back down. Right now, it seems like it's bumping its head and it's falling back down.
It does seem that way, sure.
So, but in general, the trend of rising rates is bullish for the dollar. It has to do with interest rate differentials. So basically, our interest rates compared to interest rates in Japan and Europe and so on. So if our rates are going up at a faster rate than interest rates overseas, then it's going to attract more money to invest in our bonds, because they can earn a higher yield, basically.
Right. So that's great. Well, and people can read about this where?
Just realinvestmentadvice.com. You'd have to scroll back through some of our more recent articles. I wrote this on Monday afternoon, but you can see it's one of our more, one of the articles I wrote earlier this week, basically.
Recent enough. Recent enough.
Yeah, recent enough.
Exactly.
Yeah. You don't have to dig too far back to find it. But yeah, it's
see
like
all the charts
Jesse,
there.
you guys have been writing some really great articles, and it's really great to have you on the Real Investment Advice. And of course, then John, you just you did a video. We got a video here, and you did a great job on the video. You're not that much of a TV guy, right? But you've got some TV experience.
Little experience.
Because you actually did TV with Morningstar.
I did. I used to appear on CNBC when I was with Morningstar, and I did some video, some in-house videos for Morningstar as well.
So he set a pretty high bar for you, Jesse. I got to tell you. We cut some video with John, and he was explaining a portion of your article, talking about I forgot the headline about the bubble.
Yeah, so Research Affiliates, a firm we admire in Newport Beach, California, came out with an article about bubbles and whether the U.S. stock market's in a bubble. I think they concluded it is. And so the idea was if U.S. stocks are so expensive, you can avoid them and buy other stocks, namely foreign and emerging market stocks, which are not cheap, but are certainly less expensive than U.S. stocks. And so that was one of the main investment themes of the article.
And one of the charts that you put up was the cost-adjusted price to earnings, the CAP.
So the cyclically adjusted price to earnings, right? So when you look at it, I was going to say when you look on the newspaper, but no one reads the newspaper anymore. But when you go online,
what is this newspaper you speak of? I don't know what we're talking about here.
When you go online and look at a stock price to get a stock quote, you see a PE ratio, and the E, the denominator in that fraction, is usually just the last 1 year's earnings number.
Okay.
So you're getting a price to 1 year's earnings. Well, earnings can be misleading when it's 1 year's earnings. So all the cyclically adjusted PE does is it takes the last 10 years worth of earnings and inflation adjusts them and then averages them out. So you get a better understanding of the earnings power of the market or a company, whatever it is you're looking at.
And so in the chart that you put up, it showed a bunch of countries.
That's right.
And it was remarkable to see most of the countries on the price over earnings with 3 to 4. What the index was. But the USA, right at the end there, it was just...
We're in the 30s on the cyclically adjusted
light
PE.
years ahead of everyone, or above everyone else.
We're very, very high in the cyclically adjusted PE. We're in the low 30s. In fact, that's where we peaked in 1929. That's a little ominous. And then we peaked it in the low 40s in 2000. So, I suppose historically you could say that there's precedent for being higher than where we are now. Yeah. But we're high. Then there are other arguments that, well, this is a much different economy than we had in 1929. It's much more diverse. Companies are more profitable. Tech companies. I mean, the hot companies in the late 20s, I think, were electric utilities. They were the tech companies of their day.
Right.
So they're the most stodgy and boring companies now. So that argument leads to the thesis that, well, maybe the cyclically adjusted PE, the average of it, which is 16.5, should be bumped higher to 20 or 22. Oh, we could have an argument about that. That's fine. But it's not 30.
I'm not going to argue on that with you, John. That's not my wheelhouse there.
Okay.
No, so... but as and when you talk about the fact that the economies have changed, and then this also kind of leads to, Jesse, what you and I were talking about in our office earlier today, is just that our economy, what qualifies as exports for us, has changed. We don't manufacture as much here anymore because it's like the manufacturing is going to countries where they have lower labor costs, fewer regulations, and so consequently we don't actually physically build things, but we still have pretty high services and financial advice and technology, and intellectual property, which
knowledge economy, basically, a service economy, and consumer economy, essentially.
And so that's where we are. And then that kind of leads me to this story. I don't know if we have some segue music because I'm making a brilliant. There it is, some brilliant segue music there. Because it just turns out now that Ford has said that they are going to stop building sedans here in America. They're sticking. Now we have to say it's like they're not abandoning America. Ford is not abandoning America because they're sticking with the trucks and SUVs that are much more profitable.
And Mustang, I heard.
But the Mustang, but the passenger cars are moving out and they're being built out somewhere else. And I think that's just really kind of they're focusing on Jeep SUVs, Ram pickups. So I apologize. I'm sorry. That's about Chrysler, but it's just really kind of amazing the dynamic how these things have changed over the years.
It is, and we'll see if the oil price has any effect on that. Because although SUVs and pickups have certainly become more fuel efficient, they're not as efficient as sedans, and so
that's true.
Maybe there's a limit to how much
Yeah.
How much Ford can do that if oil prices keep rising.
Yeah, basically Ford is 2 years from now, 10% of the vehicles rolling off of Ford assembly lines and into the showrooms will be sedans and sports cars. So only 10%, just the Taurus and the Mustang. Yeah. Everything else, pickups, SUVs, commercial vehicles. So they're outboarding the building of some of their interesting. So that's very interesting.
I'll tell you, as a new resident in Texas, I can really feel how popular pickup trucks really are.
I'm tempted to get one myself.
Yeah, exactly. Yeah, because Jesse, John, you moved here from
Southern California.
And you moved here from
Long Island, New York.
Long Island.
And you guys have been going through the process of being licensed and getting your automobiles registered.
Yes.
In the great state of Texas. How's that been working out for you?
It's funny you should ask.
I started with getting my car registered here, and I'm still waiting for the title to come about 30 days after I went to motor vehicles.
From California, or the title from Texas to be processed?
I handed in my California title, and they're supposed to produce a new one from Texas, and I haven't. So I've got the registration papers. I don't have a title, though. I'm waiting for that to come in the mail.
And then, Jesse, you just went through trying to get a driver's license.
I finally got it successfully last evening after the 7th attempt since January.
Wow. Really?
I had gone, each time there was some sort of different problem. A couple of them being that there was literally no parking. People don't believe me when I say this. There was literally zero parking.
Wow.
I had to drive
to
45. I forgot the actual address of it, but it was several different places.
Yeah.
I had to drive there 45 minutes to get there and say I can't complete the process because I can't park here.
Oh, you're doing it wrong.
That happened to me once in Los Angeles.
I filed online to go in the queuing system, and that was back in January too. And finally got in. That I didn't have the proper paperwork because they said, because I was born in France, and they said they needed some sort of immigration or nationalization certificate. I thought having a social security card was going to be enough proof.
Wow.
See, in Texas, we don't have queuing systems. It's called standing in line.
Yeah,
right. Well, there was a system online. Yeah. But then the problem is, then 2 days ago, that system didn't work.
Yeah.
So the system was not.
So it was
finally
down.
Everything, all the stars lined up yesterday, and I got it.
Yay!
So now, thank you. And now that finally paves way for me to get my concealed carry pistol license.
That's
which is one of the bigger reasons why.
It wasn't about driving. It was about
the. Forget about driving. We don't need. But hey, I was able to drive with my New York driver's license, but by law, within 90 days, you have to get your Texas driver's license. But I couldn't get my CHL license until I had my Texas driver's license. So now I'm going to be starting that process probably as soon as this weekend, actually.
Right. Oh, that's awesome.
Try to look for some concealed carry classes. And I'm pumped.
Yeah, well, and for those of you who wonder about the guy born in France and raised in Long Island, what he really knows about guns, you listen to last week's podcast when he talks about he brought his British girlfriend over to the shooting range over at George Bush Park, and
she loved it.
That was awesome.
That's terrific.
That was a great story.
Yeah. Started out as a gun hater, came away as an enthusiast.
Yeah,
so coming back in July, and then we're going to be able to shoot pistols because we didn't get a chance to shoot pistols this past time, but. In July, we're going to, so just trying to...
You know what she said? She said, I'll be back. There it is.
Literally.
That's awesome. Well, thank you so very much, Jesse. Thanks for joining us. I know you're studying to become like a certified a consultant or trader. Or
exactly. So I have to take my Series 65, basically.
So you've got some homework.
Registered investment advisor test. It's a lot of legalese. And
And John just passed it.
Congrats. Yep. I'm so envious. No, it's I have no concerns about doing it. It's just a matter of putting in the time to actually sit down and go through and be very thorough with the test. The problem is ever since I started here, full-time at least on February 1st, the markets were going haywire. So there's so much to write about.
That's
so I was like, I'm going to hit really hard and cover what's going on in the markets and running all the different social media and so on. And it's like, I'm really wishing for like a little bit of calm like we had in 2017 so I can just have a few months where I can just finish up studying and then get that test and taken care of and then move on.
Yeah, I've kind of pulled back from my reporting for for various reasons, from reporting for the actual daily market reports for real investment advice. But real investment news rather. But this week has been crazy where I've been kind of chomping at the bit to get back to get back in front of the camera. So I'm teaching John how to get on cam and Jesse to get on cam. So we're going to be seeing more reports from them, and I'm really excited to work with that. My head has been buried in this Social Security webinar that we've been doing here at Clarity Financial. I know anything that you want to know about Social Security, and the moment that I hit render on that piece of video, it's all going to be out the window.
Well, Rich Rosso is just incredible, and the amount of knowledge he has.
Yeah, him and Denny, they had a lot of fun, and it's a fun webinar. And so it's like, you're for Clarity Financial, look for it, and it's something you're definitely going to be wanting to watch. So, but thank you so very much for coming and talking about us. So there it is. So the other big news happening out there right now, I would say possibly the biggest news happening right here is the North Korea, South Korea, these discussions where it looks like there is actually solid discussion that they are finally going to end the war.
Isn't that phenomenal?
Yeah, it's amazing.
We're watching the live feeds in our studio here on Fox and CNN, and you've got the two leaders of North and South Korea walking side by side, shaking hands, shoveling dirt on a tree in the demilitarized zone.
Really?
Yeah, very, very symbolic, and they unveiled a giant stone that's been engraved. Very symbolic, very historic. This is just amazing.
It really is. It really is amazing. But there's part of me that just kind of worries about whether or not... I guess I just worry about the future of, how all of this is going to work out, right? Because it's like, does this mean that North Korea is really going to open its markets to Western things? Or is it just about denuclearization and they're still going to have their isolationist policies?
Yeah, and will they really denuclearize? And then have they gone far enough in their program that it doesn't matter so much if they stop pursuing it? And
is North Korea going to have any say over our American bases over in South Korea?
Right.
So they can they can clear the denuclearization, but you just have to wonder. There are
a lot of questions about this still.
There's a lot of questions about it.
Where's China and all this too? Because they've been the broker in the past for any discussion. I don't know that we've had any, but they've seemed to have been a broker between North Korea and the rest of the world.
Right. Yeah. So it's been very interesting. And then, of course, a lot of it has to question: is it a matter of timing or is it a matter of policy? The way Trump has handled these things, concerning is it him playing hardball with them that forced Kim Jong-un to go and start negotiating with South Korea, or is it because Kim Jong-un was previous policies from previous administrations that allowed him to become a nuclear force, to allow him to actually push other countries to come to the table.
Right.
And so that's very interesting. But one very interesting fact reported on Newsweek, and it's talking about Kim Jong-un during this visit. He reportedly brought his own toilet. He brings his own toilet on trips in case his enemies wish, for some reason, to steal his excrement.
That's just gross.
This is the best. Actually, it was repeated in Newsweek because apparently a report in the Washington Post. It says Kim's need for a porta potty first emerged in 2015 in an article published on the Daily NK, which is a Seoul-based publication. So, so the original story came from South Korea about North Korea. So you have to wonder how much about is propaganda. But, there's very little news coming out of North Korea that I don't doubt. When you hear that they have 10 approved haircuts and mandatory mourning and weeping and wailing on things that really make them sad or really make them happy.
Now, that's one thing I don't have to worry about is the North Korean haircut. I could never pull that off, thank goodness.
No.
But I sure hope that doesn't become a thing. That's almost as weird as those man buns that you see.
Yeah.
Yeah,
exactly. Yeah, so that's, apparently it's so that they cannot derive information about his health status. That's the reason that I thought it was that we're going to clone.
Hey, here's his health status. He's well nourished.
Yeah, he's well nourished, and he needs a little more fiber in his diet. There it is. So you want to talk about a special week?
Yeah.
This is a very special week because Kanwal is here.
Kanwal
Iqbar? Am I saying that right?
Iqbar.
Iqbal?
Yes.
All right.
There you go. Got it.
Kanwal Iqbar. Kanwal, you are so much fun to talk to. We love having you here. We are so happy that we finally got you in onto the Underbelly. But you were telling us a story. You bought a car through Carvana.
We did, yes.
That's awesome. Actually, before we go much further, for those who might know, and Brent, if you can turn me up here, here's my favorite. This is actually one of my favorite commercials of all time. Here we go. Talking about Carvana.
That sucked.
That sucked.
Didn't suck.
In my kimono, bought a car from my casa, how bizarre. Saved me dollars, that made sense, that didn't suck. In fact, I liked it. That didn't suck, that didn't suck, that didn't suck. In fact, I liked it. That didn't suck. In fact, I liked it.
Woohoo! I love that. That's the Carvana didn't suck commercial. Do you remember that?
I haven't actually heard of that one.
You hadn't heard that one? I hope
we went in with that one.
Okay, so Carvana is basically you're buying a car online. Mm-hmm. It's like the Amazon for buying vehicles.
It is, yeah.
Yeah, and what kind of car did you buy?
So my husband traded in his Jetta for a Passat. It was a 2017, and he's been searching for a car for a long time.
Your husband kind of gets into the search, doesn't he?
He does. He goes up above and beyond.
The thrill of the pursuit.
Yeah, definitely.
And so you guys bought it all online? You looked up all the details and everything online?
Yeah, actually on his phone.
On his phone?
That's what he claims. He said he's been searching for it online on his phone. Literally, you can search for any car, any trim level, put in all your details. Look at the car. There's like a 360 video, a virtual video. You can just zoom around and online, and the process itself was just amazing. You put in your trade-in value, what you're looking to pay, get your loan approved, and everything is literally online. You can even sign your documents online.
Really?
So
that's amazing. So you didn't have to haggle. Now, Carvana, they don't haggle, right?
No, they don't. Yeah.
So it's kind of like CarMax.
It is.
Which you almost kind of like. You know what? It's like I'll finance maybe another extra $1,000 to $3,000 if I don't have to haggle.
People don't have the time or the patience to go through the grind.
It's an unpleasant experience.
That they put you through. The last time I bought a car, the last time I bought a car was great because I already had it worked out. But the last time I went with someone like my daughter or my son to do it was just unnerving.
It is.
Yeah, it's uncomfortable, but I went with my mom, and we got her a car after she had this beautiful 2007 red Cadillac. After Hurricane Harvey. And, here in Houston, everyone was just kind of driving crazy because all these routes were changed. No one really knew where anything was, and someone just wasn't paying attention. They ended up rear-ending my mom hard enough, pushed her into a median that she rolled her caddy onto its roof. And then, some good Samaritans, bad idea, well, good-hearted, they came and they actually rolled the car back over onto its wheels, which you don't want to do with my mom still in the car, But thankfully, she didn't know
She's
real
lucky
interest.
She was in the caddy.
Exactly, and that's the thing. The caddy, the roof held up, so it kept her protected, but we ended up having to get it. So now she got a car, Sonata, and what a disappointment it is for her. She can't
Hyundai,
afford.
It's
a Hyundai Sonata. It's a beautiful car, and it's a nice drive, but it's no caddy. It's no caddy. She can't get back to
Sonata
it. So
in a minor key.
So did you have the car delivered, or did you get to go to the vending machine?
We did. We actually went in to get the car because we wanted to experience the whole, experience of buying a car online. So when we go in, they're so organized. They were ready for us. At the time, our appointment, he had all our paperwork ready to go. And the cool part was he gives this huge coin that you actually put into a vending machine. And first we're like, okay, what's this? And we're like looking around. There's no one really there. So you put it into this machine and select your name, and it actually it delivers the car. Down
so
to
you see the machine go up, and it grabs it and pulls it down. And
I'm just curious.
There you go.
When you put the coin in, did you check to see if there's any change in the slot?
An extra coin that you might find?
Good idea. Next time.
Or like I had suggested, it's like giving a little shove to the machine itself, see if you get a free car.
Yeah.
We'll have to try again.
Yeah. No?
We'll have to try
dancing
again.
with the vending machine. Yeah.
But yeah, for a while there, it's like when they were building that thing, everyone was like, "What is this thing?" It's like a big glass tower.
Yeah.
But when you drive by it here, like I said, not a lot of towns have this, and we are lucky enough to have.
I've driven by it.
The Carvana
nice.
vending machine, and I've always wanted to see it in action. I'm sorely disappointed that you didn't tell me you were doing that. I totally would have been there.
So are the cars wrapped and fresh in there?
They're washed, ready to go.
Yeah.
So when it comes down, all you do is just walk around, inspect. You can even take it for a test drive, which was amazing before we completely signed any paperwork.
And you told me that you can keep the car for up to 7 days?
Yeah, they're money back. I
Yeah,
love,
because
which
you're
I
buying
love.
online.
Yeah.
So you've got like a full, no questions asked. If you don't like it, you drive it.
Wow.
Yeah.
You know what? It doesn't suck.
It doesn't suck.
It doesn't.
So that you're not dealing with a representative of a particular manufacturer at all.
No,
So
not
they
at
handle
all.
all makes and models.
Yeah, they do.
Yeah, it's like CarMax and
Yeah.
AutoNation, but with a no haggling.
Yeah.
It's like you buy it online, and either you like it or you don't. You've got a week, and
that 7-day return policy is amazing because
Yeah.
we do tend to return a lot of things.
Yeah,
So
well, yeah.
did you happen to research rates and terms, and how do these guys stack up against, say, a GMAC, Ally, or one of the other embedded finance companies?
Versus rates, I'm not too sure because my husband did everything online.
We need to get him in here.
yeah.
I'll ask him. He's making the payments.
We have
So I
8
don't
minutes
know.
left. See if you can get them in here.
Yeah, call him.
Maybe not.
Yeah, but the price for the car, we did compare it to CarMax and other dealerships, and it seemed like the best deal that we can get for the package that he was looking for.
Mm-hmm.
So it turned out their prices are pretty good. They're more comparable, better than like CarMax.
Wow, that's great.
And going into a dealership is just a hassle. We're not.
Totally.
It's like,
Yeah.
I wish they'll do this for
It's-
like new cars.
It's appealing. I think it's like
See, I'm on a first name basis with the dealership that I
Okay.
take my car in for service because, number one, my car is the one with the most miles on it of any cars that comes into that
go
dealership.
so they want to see
They know
whether or
me.
not how long it's going
And
to stay
then they
alive.
send all the new sales guys to me when I'm in the showroom waiting on my car to be serviced. They come up to me and put the make on me, and I said,
Yeah.
"Look, guy, you can't beat the deal that I've got right now.
Exactly.
No payments, and I'm happy with my car." And they go away. Like that.
That's how it is
Yeah.
for me too. It's like my car's got issues. Thank God for all those robocalls offering me to extend my car warranty.
Oh my goodness! Have we had like an explosion of those robocallers here of late?
I'm getting 3 to 5 a day.
It says scam likely on my phone every other day.
Scam likely. Yours
Yeah.
is scam likely. I wish I would get that. I just get it's from Jersey Village. They all look like local numbers.
Well,
and
I
clones.
use the Hiya HIYA.com, the Hiya app on my smartphone, and it screens all that stuff. They have a user database.
Yeah.
So if you get a call and you identify it, it goes into the database. So the next time those smart alerts ring up somebody's phone, it'll flag, say, suspected
like
scammer.
a crowdfunded thing.
It's
So that's
free
awesome.
and it works. I recommend it.
That's
Hiya.
Great.
So talking about buying online, are you an Amazon Prime? Do you Amazon
I
Prime?
love Amazon.
You love Amazon? Do you Amazon
Yes,
Prime?
I do.
Brent, do you Amazon Prime?
All the time.
I have it too. But you know what? I'm really now thinking about dropping it.
Why?
Because they just announced that starting on May 11th, new Prime customers are now going to pay $119 every month. That's gone up by $20.
Oh my goodness.
Existing Prime and Prime student numbers are going to see their payments go up on June 16th. So, mine doesn't reset until I think February. And then
Yeah.
I'll be paying the new amount, $20 a month. So you break it out over 12. So maybe you're paying a little over $130.
I think mine resets in May, so I might dodge
something
it for
like
a
that,
year.
$130,
Yeah.
$140 and stuff. This is the second increase. In 2014, it went from $79 to $99. But now I'm starting to think, it's like, do I really need everything delivered in 2 days, or can I wait 3 days? It's still free delivery if you wait 3 to 5 days.
Yeah, but you know what? I like the music service.
You like the
Amazon
music?
It's worth it to me
Yeah.
to have the free service.
For you like it for the music?
Yeah.
Because I don't watch Amazon Prime too much. I watch the Tick miniseries,
Yeah.
and I watch that, but that's about it for the original stuff. I know that there's a lot of good original program, but
Oh, well,
I'm just overwhelmed with everything else
Yeah.
because I've got Netflix and I've got HBO Go. Yeah,
Well, I've got the Fire Stick, and
Yeah.
so we watch that a lot.
yeah.
And it's worth it for me.
Do you use it for anything other than shipping?
I do have. I've watched a couple of videos, Amazon Prime videos.
Is
music.
it? Do you watch enough to pay for $119 a month? You
but
know
the
this
2-day delivery.
Wait, a month?
No, sorry, not a month.
A year.
Yeah.
But so now we're
basically $10 a month.
$10 a month now. Yeah, and so it's like now I'm starting to get to the point where I'm like, that might be the breaking point for me. I think I may
add up
rationalize.
if you have it with Netflix, and I wonder if Netflix will raise their price now.
Yeah.
Where is Netflix now?
I don't remember.
Or 9 maybe?
Yeah, so $8 to $9 a month.
Yeah.
But it's like I cut the cord so I could save money. But now that I'm paying for all these subscription services, I'm really kind of hitting that threshold of whether or not it's a good thing. But talking about movies, the time has come. Here we go. Hang on. Okay. For those of you who might be watching at home, I have now officially put on my Captain America. There it is. I am so ready for Avengers Infinity Wars. I said Affinity Wars. They have an Affinity for War. John, I know. I don't even have to guess. You're not going to go see it. Come on, man. Kaval, you and your husband?
I was actually looking it up right now.
Yeah?
Maybe we will.
You buy your tickets online?
I haven't bought the tickets yet, so we'll see.
I bought
still get in.
Within 24 hours of them being available online, I had my tickets.
Yeah.
Now, I do movie reviews here, and I am going to do a review of this one. I didn't get to go to the sneak, so I couldn't have a review ready for today. Mm-hmm. But I bought tickets with the anticipation of maybe I'm not going to be able to see the sneak, so I bought tickets for 5:15 this afternoon. And
oh boy,
I've been mentally and emotionally preparing my wife for like, honey, you have to come see it. Now, the big MacGuffin, as Hitchcock would say, the big MacGuffin, the big thing that's bringing everyone together for this one. Of course, this is the accumulation. We've had 10 years since the first Iron Man. 10 years, I think 18 movies.
Has it been that long?
It's been 10 years since the first Iron Man.
Wow.
18 movies in the Marvel Studios. All of these characters are coming together. So you've got Thor, Iron Man, the original Avengers, plus the Guardians of the Galaxy, and Doctor Strange, and Black Panther. All of them coming together into this. Plus, there's going to be some surprise cameos. Apparently, there may be a death or 3. I don't know. I'm trying to stay away from all the spoilers.
You know how they kill them in the cartoons?
How's that?
With an eraser.
So here's the scene. So I've actually been going back watching, to my wife's chagrin. I've been going back and watching all
studying.
I've been studying up on some of the past Marvel movies just to kind of get myself ready for the movie. And the big thing are these Infinity Stones. You put them in a gauntlet, which is a big glove. And the big bad in this one, Thanos, his goal is to put the stones in the gauntlet, gives him the power of each individual stone. So you've got one.
I'm reading on Google, there are 6 of them?
There's 6 of them. It's the Soul Stone, the Time Stone, the Reality Stone. So, each of these. And so throughout these 18 movies, they've been hinting at these stones. So you can see the big plan.
Does Mick Jagger make a cameo?
There is no Rolling Stone. There is no Rolling Stone. So that being said, here is a little explanation of the origin of the stones from Guardians of the Galaxy, which I just watched last night. Here we go.
Oh, my new friends. Before creation itself, there were 6 singularities. Then the universe exploded into existence, and the remnants of these systems were forged into concentrated ingots. Infinity Stone. These stones, it seems, can only be brandished by beings of extraordinary strength. Observe. These carriers can use the stone to mow down entire civilizations like wheat in a field.
Like wheat in a field. It was kind of hard to hear, but yeah, it's like these stones have immense power, and Thanos is going to bring them. And so the question is, how can the Avengers and the rest of the Marvel Universe fight such an amazing power?
Wow.
As wielded by Thanos.
Well, I'll look forward to your review next week.
I will be doing a review next week.
I
might wear the Captain America shirt. I can't guarantee anything. So there we go.
If you
All
don't
right.
soil it tonight.
So thank you, Kaval, for coming in.
Thank
you to Jesse, who stepped out. Thank you, John. And Brent, wrap us up.
We will. Thank you. We welcome your feedback. You can find us on Facebook or online at Real Investment News and Real Investment Advice, the Underbelly podcast. Available wherever podcasts are heard. Have a good weekend. Thanks for watching.
Bye.